Last month I posted a video about wanting to refinance, and back then the refinance rates were probably around 3.5 and 3.75%, and I wanted to get 3.5% or something lower, maybe 3.25%. My plan was to hold out for 3.25% or lower because my current rate at that time was 3.75% on my existing loan. But about a week after that I looked into the rates and I contacted a couple of companies. Now the first one gave me a quote of something like about $6,000 or $7,000 worth of loan fees to refinance, and that was just over and above all the other standard fees, and that was way too much. But another lender offered me a 3.5% rate to refinance. Now what I wanted to do was refinance at 3.5 or lower, but something that didn't cost me anything. I didn't want any out-of-pocket costs. So what they did was they were able to offer me 3.5% and then $3,000 of lender credits. Now these lender credits are just sort of like rolled into your loan, and yes, you are paying for that. So at the time I owed about $404,000 on my existing mortgage, and I wanted to refinance at $400,000 flat. And these are the numbers that we came up with. So here's my closing disclosure on the loan. Loan amount $400,000, interest rate 3.499%. Monthly principal and interest is just under $1,796. It's a 30-year loan. Closing cost $1,098.27. Cash to close $7,385.28. So let's look at the breakdown. Loan cost, origination charges $1,295. Title services came up to $11.19. Total loan cost was $24.14. Add to that recording fees of $3.23. And then there's the prepaids. These are just prepaid interest on the existing mortgage and then the future mortgage. These are things that I would have paid anyway, so these are not additional out-of-pocket expenses. In Section J, you'll see closing costs of $4,398. Lender credits of $3,300. Total payoffs, this is what they're paying to my bank, although I only owe about $404,000. For some reason they calculated $406. I'll get the extra back later on. And here's the calculated cash to close, the final $400,000 loan amount. Total closing costs was $1,098 after the lender credits. Here's the payoff to my lender. So total out-of-pocket that I need to bring to the table is a check for $7,385. Keep in mind that $7,385 is not the cost of the loan. That's just the amount I'm paying the escrow company, and they're going to dole out cash to those I owe. $6,287 of those dollars are going towards my old bank, my old loan, and the other $1,000 is pretty much going towards prepaid interest. So essentially, I didn't have to pay any additional money out of pocket to do this loan. These are just costs that I would have had to pay anyway, these interest charges and the principal on my old loan. Yes, I got $3,000 worth of lender credits, and yes, I'm paying for those over time with the new loan, but it still makes financial sense, and I'll show you why. So my old mortgage payment was $2,167 per month, and my new one is $1,796 per month. So you may be saying to yourself, okay Matt, you just refinanced your old loan to another 30-year loan, so you have 360 payments. Of course your monthly payments are going to be lower, even with a lower interest rate. On my old loan I had 276 more payments to go from January 1st of 2020, and now I have 360 payments to go. Yes, they're lower, but it still makes financial sense because of this. On my original loan, like I said, I had 276 payments left, and over those 276 payments I would have paid about $195,000 worth of interest. On my new loan, my new payment is $1,796. My old payment was $2,167, so the difference was $371. Now if I took that $371 and applied it to principal on my new loan and just basically paid my old monthly loan payment on my new loan, then I could pay that off in 266 months, and my interest charges only total up to about $175,000. So I'm saving about $22,000 worth of interest charges by refinancing at this lower rate. Even though it's only going from 3.75 down to 3.5% essentially, I'm saving that much more money on this new loan. Now, am I going to take that $371 of savings per month and apply it to my new loan? No, I think I'm going to actually invest it in the stock market. I think over time I'll get a much better return than just paying down this new loan, trying to get out of this new loan. I'll get more better returns on the stock market, and that's what I'm going to go for. So essentially with this new loan, I was able to get a better rate, save some money over the long term, and have no money out of pocket, which is great. And then if interest rates go down lower, I can always refinance if it makes financial sense. Now, just after I started this refinance process a few weeks ago, interest rates started creeping up, and then they went up a lot more. So they're higher now than they were before. So they're not even as attractive as they were when I was talking about it a month ago. So you might want to cool your jets and wait if it makes sense. If you're still paying over 4%, then you could probably do this sort of lender credit refinance and have a better deal. But if you're at 3.75 now or 3.5, you might not even get that rate right now because I think rates are a little bit higher. Here's a website I want to share with you. It shows the daily mortgage rates on a national basis, sort of the average, and you can see how they move day to day. So I'm going to put a link to this website down below. I'm sure it'll be helpful for you if you're interested in refinancing anytime soon. So that was my refinance journey. I hope you can refinance soon and be better off financially. Peace out.